Can you hear me? I can't hear you. No. Can you hear me? Okay, you can hear me. I can't hear you, Mickey. Let me just double check my sound, but I think I'm okay because I've been chitty chatty this morning. No, I should be good, yeah. Mickey, look at the chat.
Can you hear me?
I can hear you.
You can?
I can hear you now. Hey, how are we doing?
All right. Good. Can the chat hear me? All right. Wow, I just had a whole conversation with myself. All right. JYPC, Future Millionaire, can you hear me now? Just want to get confirmation from the chat that they can hear me.
Fantastic. Yeah. We just got a message from Future Millionaire.
Oh, okay. Perfect.
And yeah, we're good. We're good.
Okay, so hopefully you guys had a good weekend. Got some good back testing going on. This week is okay. During certain business cycles, just like in the futures or just like in the company equity space, certain news catalysts during the business cycle would determine what on the balance sheets matter. The same thing goes with, the economic cycle that we're in and the market regiment that we're in will determine what news matters. And right now, just like last year, inflation was a big deal. Well, inflationary news is no longer a big deal because we have got that under control. We're back at the 2000 and pre-COVID levels. So they're not worried about inflation right now. The biggest thing right now that everybody's looking at is the real estate market and the job market. Can it hold up? And specifically the job market, because, just like every morning we use historical data and align it with live price, and I always say live price gets a trump in things. Economists, investors, they do the exact same thing. They do it at a larger scale, right? And that scale, is not just to protect investments and to let people know what kind of investments need to be, like what investments they need to be in and when they need to hedge their wealth and all that. But it's mostly because these markets are a direct reflection of economies, and those economies are what matters, right? Right now we're in the market regiment of. There we go. There it is. We're in the market regiment of, we're trying to everybody, all economies, whether it's the euro, whether it's UK, whether it's us, we're trying to figure out, is the slowdown, are we going into a slowdown or are we going into a recession? We know that historically every single economic mishap or slowdown or recession happened due to over monetizing the economy, meaning that too much money was injected into it, which led to an event catalyst that would ultimately crack the egg, right?
Yeah.
So now we know that due to COVID, 2020, like we know that 2020 led to us injecting $9 trillion. And then we had to and a lot of people will tell you that was a monetary mistake. right? There was too much money injected, and that's what led to the runaway inflation in 22. Well, absolutely it was, because, you know, when you inject $9 trillion into economies, and the reason America did that was because we are the central bank backed currency of the world, right?
Yeah.
So we're not just doing that for ourselves as a country, we're doing that to support the world and everybody who uses our currency. Well, it led to runaway inflation, and all these other countries decided that they had to get their inflation under control, but they can't truly control their inflation until the central bank, the backed currency inflation is under control, which is why we went on the interest rate um rising cycle. And like, it wasn't the fact that the interest rate went that high, because like it didn't go that high, but the delta, the rate of change, how fast we got to 5.5,
Yeah.
basis points, that is what, you know, everybody was wondering, was that going to be restrictive enough? Was the rate of change, I mean, how fast we got to it, was that going to be enough to control inflation? Well, it did. Um, and now we're trying to figure out, there's going to be, when you deal with that much stress, right, in economies, the markets, entering $9 trillion and then having runaway inflation happen, like that's like taking a Honda Civic and maxing out the RPMs on an empty tank, on a quarter tank of gas with barely any oil in the engine, right? You expect some kind of mishap, and that's what the market's worried about right now. Um, so far, the Fed Reserve, whether you like them or not, or whether you think they did a good job or not, like whether you think that COVID was a conspiracy theory experiment, see if they can control the mass. It doesn't matter. Like, the Fed Reserve did an outstanding job so far
Mm.
navigating through all
Yeah.
of that noise,
Yeah.
through COVID, through inflation. Um, the monetary policy did an outstanding job. Fiscal policy, your local politicians, they might not have been as effective with it and made things harder. But we're not here to talk about politics.
No.
We're here to talk about the markets.
Yeah.
And I don't care about any fucking politics whatsoever, because it's outside of my control. I support the U.S. Constitution. That's where my stance is, and that's all I care about. But so right now, back to the stem of things, right? The market cares about jobs, right? Because if you look at the Phillips curve, whether it might be one of the most outdated things out there, but it is very effective. The Phillips curve is a direct reflection with the dual mandate that it's a measurement of the dual mandate that the Fed Reserve has, right? And jobs are a huge portion of that, right? And this is just basic economic 101 stuff, right? Um, so right now we know that there's going to be a slowdown or a recession, right? Well, we can't call it either one, because as I wrote about in the article on Friday, the weekly review, right? We can't see either side of that yet, because company earnings, which are a byproduct of economics, right? Company earnings, right? Like, they're starting to point to a possible slowdown. It won't be until next quarter's earnings before we start seeing real the lagging policy of the interest rates. Like, was it restrictive enough, or are these companies still strong from the $9 trillion that got injected in the economy? But basically, long story short, right now everybody's focused on jobs, right? That's the catalyst that will move these markets, and NFP Friday is a huge portion of that, right?
Mm.
Um, and I know everybody likes to say every news event is the most important one, and I'm not saying that it's the most important one, but it's the next clue, it's the next puzzle
Yeah.
piece to
Yeah.
letting people know, are we heading into a recession? Are we heading into, a slowdown? And then after that, it'll become company earnings and anything real estate related. All right, so starting with our system.
Yeah.
Right, let's start with the daily chart. All right, so far this is previous month 50%. We're above it.
Yeah.
Right, so now we're looking to get above the same area. We're trying to get back above. We're just going to use this previous month 50% because this is what rejected last month.
Yeah.
Month of
Yeah.
August, right? Like, and then we're expecting to see how we play out on NFP Friday to see if we're going to break out of this 3-month range that we've been in, right?
Yeah.
So right now we're bullish because we're above previous month 50%, right? So all eyes on staying above that and then seeing where we are within the NFP
Yeah.
Friday. Going to the weekly, using our constant, our fixed variable, we're
Yeah.
flat right there in the middle of it, right?
Yeah.
We've allowed, when we overpriced this move in August, where we dropped 1,000 hand or 2,000, where we moved 2,000 handles in the month of August. In Q, we've slowed down enough for 3 weeks to allow everything to, kind of catch up and, base out a little bit and get healthy again, right?
Yeah.
Because this was such an extreme move to both sides, like it just needed some time. So we're looking to see, right? With NFP Friday, are we going to start overpricing, and is the market going to continue towards an upward trend, where we get overpriced again, and then we have to slow down, get overpriced again, slow down, et cetera, right?
Yeah.
So we're in a peculiar phase of the market, right? And it's
Yeah.
one that's a little bit more complex, right?
Yeah.
All right. So with that being said, let's mark out our Sunday again. Right there. So we're going to do this candle. Just doing the 1800 candle on
Yeah.
the 65-minute chart. And then this is Tuesday's range, the 9:30 to 10:30 range. And as you can see, right, we've rejected. Let me fix this real quick. I don't think this is correct. I thought it wasn't. There we go. I was like, this does not line up correctly. So 9:30, 10, 10:30. So it should be going to that candle right there. All right. So going back to the 65-minute. All right. As you can see, this Tuesday range, we rejected it this many times to the upside.
Yeah.
So that's the market's clue, and we rejected the downside this many times. So this is the market clue saying this is our range from a higher time frame perspective, right? Right now, based off of the weekly and the daily, right, we don't have many clues to tell us if we're looking for the high of the day versus the low of the day like we would if we were in a trending market. So now we have to really dig into the sessions. Like in easier markets, like trending markets, right, it's very obvious. Like when you're in a trending market, like during this whole period, we were looking for the low of the days during 5 o'clock and 11, right? If you go back to 2022, we were looking for the high of the days because we were in a trending market lower based off of this system.
Yeah.
But because we're slap dab in the middle and we're in a ranging market, right, waiting for more clues, we have to be prepared to look for both. And we're going to be lining up the sessions, the Asia market and the London market, to determine is that a high probable low of the day or high of the day scenario.
Yeah.
All right, moving on. All right, let me open up the chat. Okay, cool. All right, so now due to this being a holiday, right? The Monday being a holiday, we're going to incorporate this as one whole day, right? Because it wasn't normal volumes when it came to life cycle of a trade. It was the markets were closed, right?
Yeah.
Like I was off. Everybody who deals with anything regarding the life cycle of a trade system, right, and the workflow process around that with the executing brokers, clearing brokers, and prime brokers, and the collateral margin side of things, they were off, right? So I don't usually incorporate anything that happens here. I will incorporate it from a statistical standpoint because there are, stats that we can use this on. But at the end of the day, like I typically incorporate this holiday with the next day together, as most do.
So, quick question: does that mean structurally you go back -1 in terms of days?
Yes.
Yeah. Okay.
So I'll be looking at Friday's
Yeah.
data over Monday's data.
Yeah.
All right. So market clues. All right. That market clue is that we continue to reject the top of that Tuesday's range. Right. We already discussed that.
Mm-hmm.
And, like we're below previous day midpoint. Right. We breached it through. So now we're just looking to see what the market wants to do. Going to 15-minute. Right. We know that. Yeah, we'll put our time-based probabilities on now. All right, so let's do our time-based probabilities.
Yeah.
Starting with midnight.
Yep. 70, it was 70 something. 68.5. You have something similar?
I'm on the 15-minute looking at 238 sessions. Are you on the 5-minute?
I'll change. I was on 15 actually. Let's try again on the 5. Midnight. 8:30, 12. 73.7. I'm getting now. Yeah, okay.
All right, we should have the same data. So UTC 4 or UTC 5, American New York.
Yeah,
8 to 16:15. I've got this. Let me put this on chart.
8 to 16:15. Sorry.
I mean, as long as you keep it the same, I push all my data because I don't stop trading at 1600. It's some of the best trading that there is. Some of the most predictable trading.
Yes. I got
76.9.
30. Yeah. Yeah. Yeah.
76.9. Okay.
Yeah.
All right. Let's do our 1800. And this is the part that's going to be sus.
18. Same time period.
We'll just do last name's 1800.
Yeah, I got 71.
Right, because that will play as a structural base.
Oh yeah, nice. Yeah, it was 71 I had for that.
646. And you said 71.
71. And then 1615 is 64.5.
Oh. And that 1615, even though it's not respected as much as other times throughout the day. It's still one of the most important ones. And we're going to use Friday's settlement price because
I
yesterday's
just,
settlement price doesn't count.
yeah, understood. I just changed it back. I wasn't sure if this was a correct thing to do with the indicator, but given that I've changed the range out to 1615, and I was looking at 650, and I brought the range back to 1600.
What was the 1615 probability
60,
that you got?
64.5.
60 what?
64.5.
Okay. Always round up.
Yeah.
All right. Now, structural base, we've got it all covered. We got this low from Friday. We've used settlement tells us that we got this high from 1800 that covers these highs right there. So now
Yeah.
we can go on and move forward to projection base. But before we do that, we need to figure out what Asia and London has done. So if you use DR, put on your DR strips. If you
Yeah.
don't use DR and you want to use ICT stuff, put on your ICT one setup for life, right? And let's see what Asia has done in relationship to London, right? So Asia, how did I miss that? I went to bed. Dang it, I missed this whole move. That was a trade. When I went to bed, it was like, all right, I don't feel like messing around with this. And then it worked. Okay, so the Asia low has been wiped out,
Yeah.
right? Remember, we ran the statistics of after we breached out of this 1930 to 2030, how many
Yeah.
times do we hit the other side of it? It's
Yeah.
more
A
times
lot.
than not. Well, that
Yeah.
statistic has already been facilitated. All right, so when we do our Asia database, which let me pull mine up.
Got mine when you're ready. Ooh.
I have to pull mine up because I shut everything down. It's not going to be fun logging back into this. Oh, I'm just going to utilize yours for now
Yeah, no worries.
until I can get mine properly back up. All right, so
Yeah.
for Asia, do you have long false?
Long false for Asia and short true for London.
And
Currently
do you
true.
have Asia mid broken?
Asia mid broken between
3 and
2
9.
and 3.
Well, did it happen? Yeah, you have to do. I guess
Just
you could do.
checking that.
No, you could do 2 to 3 because it breached right there.
Yeah.
So you should be
Yes.
clicking. You should be clicking both 2 to 3 and 3 to 930.
On it. 3 to 930.
All right. So now we can do our projections off of that.
Yeah. Some nice numbers here.
All right. What are you seeing?
Okay, so we start on the negative side as we're on the negative side.
Sure.
Yeah, -1, 98%. Of course,
You
we
already hit
have
it.
hit it. 2.5, which we've hit, 92%.
Okay.
-5, 77%.
Okay.
We've
Let me
not
write in
hit
the
it.
numbers. 19406.
Yeah.
What
Yeah.
was the percentage?
77 for the -5.
77 all day. Okay.
And on 8, we have 63%. -8 is 63%.
I'm trying to get the people that show up every day just to get this simple process down. And this is the one part where I need to actually build the database for them. All right, what was the 2.5 probability? Positive
The
2.5,
positive is 59%.
which we hit that already. 673. Before we go into
Well,
more advanced stuff, you said 53?
sorry, you did say positive 2.5, right?
Yes. What was it?
Which we haven't hit.
We hit it at 1800. Monday at 1800. We jumped into it.
Yeah. Sorry, we're using my
Yeah.
mistake. Okay, yeah.
Yeah.
Yeah. Okay, so the positive 2.5 is 59%. Sorry, Mickey.
59%.
Yeah,
Okay. Going up the ladder.
positive 5 is 32%.
5,
And
3. Okay, I need
positive,
to is real quick, slow down real quick. What was that plus 5?
the
Damn
plus
it. I gotta
5,
get my numbers correct.
32%. 32%.
32, 7, 5, 3, 32%. Good grief.
Yeah.
All right, this number. Oh, okay, 673. That's correct. And then 8 to the upside,
19%.
19%. And all right. So now we've got our market condition from the daily chart and the weekly chart, right? Using NFP Friday and previous month 50%. On the weekly chart, we use the 5 EMA not as a measurement to trade around, but using it as a constant variable to see if the market's overextended or like slowing down to price in a move that already happened, right? So now what we've done is we generated market clues. Do we take out previous day's highs or lows overnight? Because there's a probability that says if we do that, we're going to return to those lows and highs throughout the RTH time. We put our time-based probabilities on, which is midnight, 1800, and 1615. We put our structural-based probabilities on, which today actually were covered, right? So we're looking at yesterday's structure and tonight's Globex structure, and pulling the probabilities around that, right?
Yeah.
And then we do our projection base. Our projection base is the one thing, unless you guys use DR or an independent database, right? Most of the viewers do not have access to a database of that right yet, right? Which we're working on. But what that is that saying, hey, Asia did this, London's done this, and then it will give you the probabilities of the projection base, right? And that's where these probabilities are coming into play at. So that's what we've done so far, and it's important that we get these, and we've broken it down to simple workflow process, and we've
Yeah.
taken out a lot of the complex noise so that all the viewers can see it and follow along. That's the only step that you guys aren't going to be able to do until we get the database built and complete, where it doesn't conflict with DR data. Number one, I have a lot of respect for DR. Right. Number two, I respect their students. And so I refuse to give anything related to DR out there because those students are working really hard. They're taking this as a profession. M7 forces excellence within his students. And I just don't feel like, disrespecting him because I do have a level of respect for him. However, there's other ways we can do this where we capture very similar stuff. And that's what we're building right now. So until we can build that,
Yeah.
feel free to go sign up for DR if you want that data to follow along. But I know that I'm here to represent the veterans who trade, and I'm not going to ever promote anything that forces them to spend money for a hobby. Because let's be honest, for most of you guys, this is a hobby and something that you're trying to figure out, which is why I'm in the prop firm space. I trade my live account. I trade equities. I trade ETFs. I trade a cyclical and a cyclical cycle, but you don't see me going that route. Right now, what I do is I've noticed that veterans like to intraday trade more than they like to trade equities, more than they like to invest. So that's why I'm in this space trying to teach a repeatable system for free that's using the highest probable way of doing things, right? But it's not that I don't want to sponsor, DR. It's just like my business statement of why I'm public is to help veterans, right? And that will JYPC, yes, like the vet indicator will eventually get to the point where it will have the database built in for this step. Right now, it has a lot of stuff in it, but that's going to be the ultimate tool. But the problem is like I have to finish coding the vet in a way where it incorporates the database of what Asia's done versus what London does and gives you the probabilities of what New York will do. Right now, you can do every other step with the vet, but that step right there. Because that step I have to actually code a data, I have to collect the data of a database, and then I have to code into that database, right? And that's something I'm working with TFO on and 2 degrees on being able to do. I'm also meeting with the CEO of Edgeful this Wednesday to see if he can do that as well. And if any of them want to do it for free, then cool. If not, I'll still, because like I said, like I'm here for the vet. Fuck everybody else. In the working class, like I'm on a mission. My mission statement is to help working class individuals not get eaten up by wolves who sell false dreams and lottery tickets using the markets, and that's that, right?
Yeah.
All right. So those are the steps that we've taken so far, right? And now we're going to talk about what 930 to 1030 has the highest probability of doing in relationship to this London box in this London
Yeah.
range right here, right?
Yeah.
If you're ICT, you use kill zones, right? If you're DR, you use 3 to 4 o'clock. If you're auction theory, you use the same 3 to 4 o'clock that DR does, because this is your London initial balance. Some auction theory people use that 2 to 3 o'clock range to represent that market open, and they say that market open is more important than the 3 to 4. Who cares? Just pick one, collect that on it, and sink it in. All right.
Yeah.
So now, based off of what Asia has done, what London's done, like we have the ability to see the highest probability of where New York 930 to 1030 will be in relationship to this 3 to 4 o'clock. So since you got the data up, let me
Yeah.
draw out the average 930 to 1030 range, which is 146,
Yeah.
and then we will. So this is the average 930 to 1030 over the last 10 days, right? We're going to measure this out, all right? And then we're going to plot it in relationship to London, right? So where is the highest probability based off of what Asia's done and what London has done? Where is the highest probability for this 930 to 1030 to be?
930 to 1030.
The DR range,
Yeah.
the initial
Sorry.
balance.
Downside X plus
Downside X,
DXP.
can you give me the probabilities?
I can. That we're looking at 30%.
So 30% that 930 to 1030 will be below like this box right
Yes.
here. All right.
Exactly.
And what would downside X be, where it can't breach the midpoint of this London balance? What probability is the DX?
DX is 14.
14.
14%.
And
Yes.
what is downside, where it's not above the high, but above the midpoint
12.
of 12?
12.
And what about range X, where it engulfs both sides?
24.
Hmm.
I know.
Okay. So this is where it becomes creative, right? So right now, what the market is showing us, right, is the fact, if I remove, let me remove some of this, right? All right. So So for it to engulf both sides of London, not between 9:30 and 10:30, you said that's 24%, right?
Yes.
All right. And then being below this high right here is around, if we add it up, downside X plus, downside, that would come out to be around 45%.
36. Oh, I would say more than that. So you were on about all the downs, right? So it'd be
Yeah.
12, 26, and 30, 56%.
Okay. So what we're saying, what the data is telling us is that this 1800 open right here is the high of the day
Yeah.
scenario,
Yeah.
right? So the most probable outcome, now we are going to align this 9:30 to 10:30 box with the stat that it can't get above this London high. And now we're going to line it up with this midnight probability
Yeah.
of 77%. But then
Yeah.
this is what we have to pay attention to. This 1800 price has a 72% probability. Now we know that this 4 o'clock price right here, right? Let's do it real quick. Go to your midnight snap,
Yep.
type in the 4 o'clock hour,
Yeah. On it.
right?
Are
And
we
your
looking all
session should
day?
be looking all day, starting at
Yeah.
8. Actually, you can do 9:30. Let's try something real quick.
Okay. 9:30.
9:30 to 10:30. Let's see what the probability of that 4 o'clock hour being hit. Right here, this pink line has a 57.1% probability of being hit today. Right there.
Yeah.
Right? Now, let's push that
Yes.
out a little bit. Now, let's go from 9:30 to 16:15. Or now we know, what is the 10:30 on probability, first and foremost?
Long.
Long? Okay,
Yes.
that makes sense. Okay. So that's saying after 10:30, the highest probability, is it by a lot of percent or a little? Like,
Not really. It's 51%
and what's the
versus
short?
42. 42.
Dang, the market's gonna make us work today.
Yeah.
So right here, this is the highest probable 9:30 to 10:30, right?
Yeah.
So now this is where the midpoints. So we know that this has a 57% probability of being returned to during the 9:30 to 10:30.
Yes.
We can do every single. We can do this 4:30 too, right? So let's see what this looks like.
4:30.
4:30. So we go to midnight snap. 4:30. Make sure you change this session time resolution to the 30-minute because you have a 30-minute interval, and it should put it right here on this 4:30,
Yeah. Wait then.
right there, and that has a 57% probability, right? Now
57. Yeah. Yeah.
here's where it becomes. It doesn't become discretionary, but you have to sit there and wait, right? So I'm gonna go to, like right now, we're lining up our charts, right? We're lining up the 9:30 and 10:30 box with these probabilities. And we're trying to use as many clues and statistical probabilities as we can to identify. We know that the most important line right now is going to be this midline for the day of London, right? Our London OU line is going to be the most important one because once we breach this midpoint line right here in London, that's going to tell us that momentum shifted, right? And when I say breach, that means we didn't look above and reject it. That means we stepped above it, the whole London, and found support from this midline to the top of this, not 4 to 5, right? About 75%. What's about 75%? So I thought that was 4 LOL. Okay, cool. Yeah, so yes, like this 4 o'clock price on the midnight snap. So if we just do 4 o'clock, I mean, let's do 4:45 because I want to show you guys something. 4:45 between 8 and 16:15. Actually, we'll do 8 to 11. Or we can do all day. We'll do different variables, right? This 4:45 right here, let it update. Let me change this to the 45-minute. And this is why I'm saying, like, you guys don't realize the power of this indicator that Austin Clark gave you, because you have the ability to take any time period. It's still, why is this not loading up?
Yeah, mine's not loading either.
4:45, 8 to 11. This is on the 4:45. Okay, we'll just do the 4 o'clock hour, right? And we're going to do it from 8 to 11. We know that it was 57% between 9:30 and 10:30, but now we're going to do 8 to 11. And make sure you put this back on chart, not that 45, so it works correctly. Now we see it has a 74% probability between 8:30 and 11, or 8 o'clock and 11.
Yeah.
Yeah, 8 and 11. It has a 74%. Now we're going to do 1615, or we'll do 1600. Yeah, we can do 1615. Right, and that same thing, that same 4 o'clock price will go from an 80% probability of being hit. Right? So now you know that 9:30 to 10:30, that 4 o'clock had a 57% probability. From 8 to 11, it had like a 74. Now, if you incorporate the whole day, it now has an 80% probability, right? And that's why I'm saying this is the one part from 9:30 to 10:30. We've got that highest probability right here. But then as this 9:30 and 10:30 is playing out, and after 10:30, what you need to be paying attention to is you need to draw out the range, high to low, that 9:30 and 10:30, and pay attention to that midpoint. And then you're paying attention to the London midpoint, because that's telling you if momentum is shifting up.
Yeah.
Right? All right. So this is so far what we've done. Now we're going to go into our daily ranges.
Yeah.
All right. So our average 10-day range.
For me, I have 340.
I've got that too, bud.
Hey.
Yeah. So right there, this is our average daily 10-day range. $340. And now we're going to do 4 to 8. What do you have?
I've got 0.56. 0.56.
I've got 41. The hell?
Oh, sorry. 10. Did you say 10 days or 80 days?
Real quick, let me put on sample size. I'm looking at 47 days. That's why. Let's put this on the 5-minute real quick and get these numbers down. So now I'm looking at the last 16 Mondays. I get 0.46.
5.6 I've got.
You got 5.6, and that's, you're doing the last 10 days, right? I'm doing the last 16 Mondays.
No. That's the last 80 days. Last 10 days. What day is it today? It's Tuesday.
It's Tuesday. It's Tuesday.
It's Tuesday.
I'm going to do that all day. Just be aware.
It's those mountains.
Yeah. So I've got the last 16 Tuesdays, the average 4 to 8 is 0.45. You have the last 80 days, correct?
Yes. And it's 0.56.
Dale, we were talking about the 4 o'clock. That's what you're referencing. I was just using the 4 o'clock as an example of throughout the day, each time frame is going to have different probabilities, right? So you've got to think, am I targeting that 4 o'clock between 8 and 12, which has a 74% probability? Am I targeting that same 4 o'clock price between 9:30 and 10:30, which has a 57% probability? Or am I targeting that same 4 o'clock price all day? Like, is it a target? right, which has an 80% probability. Hopefully that clarified that. All right, so now we're going to do 8 to 12.
8 to 12 on 80 days. My calculations are 1.17.
So mine's 101, so that represents the 101st Airborne. So we're definitely
Love
going
it.
to use that one because
Yeah.
I was actually a first sergeant and a platoon sergeant in Afghanistan in that unit, believe it or not. All right, and then we're going to do the 12 to 1600, which is 78.
Oh, 79.
Oh, nice. All right. So now we can see that the average 10-day isn't lining up correctly with these, and there never are, right? Well, we have to incorporate because the market just doesn't move straight up to down, right? It's not that easy, right? These are going to overlap, right? And our job is to figure out where the overlap happens and is it synced with the probability, right? But we know that this first step is going to be, let me go back to the 15-minute and declutter my chart. First and foremost, we know before we do anything else, we know that today is a Tuesday, right? Let me turn some stuff off. We're going to put on this awesome, and I'm working with TFO to get him to incorporate this into the vet. All right, so we're going to look at weekly profiles, and we're going to check something out real quick. Let's do the 30-minute so we get more data. Hmm. 30-minute. Historically, still showing just 4 profiles. Oh, it's showing 4 profiles because let's do the last 100 profiles. Let's do 1,000. It will automatically filter it out. All right, ignore all the scribbles. But if we look over the last 138 weekly profiles, Tuesday, Monday had a 19% probability of putting the low of the week, 14% of putting the high of the week. And going down, the two highest probabilities of the low of the week, Friday had a 25% probability because you got to realize this is incorporating the 2022 fiasco where we were in a bear market. So of course it's incorporating that, right? So if we want to, we don't know what market we're in right now. So that's a safe assumption. We're just bringing situational awareness to our thought process that the low of the week could be happening because we have 2022 and COVID where it's skewing the low of the week to be on a Friday. That's what that is doing to the data right now. You're seeing it with your eyes. And then we're also seeing the last 18 months where we just ripped everybody's faces off, probably longer than that, where we're establishing the high of the week on a Friday. So when you look at these Fridays, 46 Fridays, established the high of the week, 33%, 35 of the Fridays established the low of the week. That's incorporating COVID and 2022, right? So now, with any kind of data set, your job is to get your data set aligned with the market condition that you're most likely in. Right now, we're on the teetering point where we're not in a bear market, we're not in a decline, we're waiting on our hands, right? So this data is doing absolutely nothing for us right now. So, but we are going to pay attention to if the market gives us clues that today is the low of the week or the high of the week, right? And how we can do that, right, is these are the 5 most likely outcomes of the weekly profiles that we're in. And you can see that they're all different Monte Carloses, right? So now what we can do is we can put on the vet, right? And we're going to put in our Tuesday 9:30 to 10:30 standard deviations right here. Tuesday 9:30, 10:30, right? And based off of what price has done so far, right? We can see that we haven't reached out and touched this whole week. We haven't touched the one standard deviation up or the down starting on Monday. So this is the part where these tools are going to be no use to us, right? These tools aren't going to help us yet. But if today comes down and touches the 1 or whatever, this is the first standard deviation or the second standard deviation, and then we start rejecting on Wednesdays, then we're going to have more clues on which weekly profile it's going to do. So we're taking the highest probable weekly profile that we're currently on, and then we're aligning it with standard deviations to give us those confirmations that that is the most likely weekly profile that we can expect to see. We're not there yet.
Gotcha.
All right, so going back to our day. Right, so right now, this is a safe assumption, right? So if this Asia high right here was the high of the day, we shouldn't be able to get back above this London OU line, the midpoint of London, right? And if that's the case,
Agreed.
then our average daily range, our average 10-day range should look like such, right? And we should be able to make it at least to this 19309, which has a 63% probability of being hit, right? And so now we incorporate our 4 to 8 probability right here, which has already been maxed out, right?
Doubled.
Where's the 4 o'clock? Right here, right? So we can see that we disrespected that. So if you're taking longs between now and 8 to capture this midnight retracement, that's okay, right? That's a high probability trade. If you have the data on it and all that, right? And as we retrace back up, we're going to be paying attention to this London midline, because if we breach that, then remember when we were trying to figure out the 9:30 and 10:30, we said there was probabilities of this happening in a long. That's when your mindset needs to shift to this being a low of the day scenario right here, right? If we breach that London midline.
Yeah.
But for now, the market has told us, right, from a probability standpoint, that this Asia high is the highest probable high of the day scenario so far. And that can change because it's not even 6:30 yet. Speaking of, all right, so now, because the market has given us, we said it was going to be, what did we say this was going to be? Like this. This was going to be the highest probable 9:30 to 10:30. Now we have our 8 to 12. That should look something like this. And then when it incorporates the 12 to 1600, right? Now
Depends,
this can go either way at this point. It can go down like this, right? Or it can go up, right? Because the market is not directional yet, right? And it hasn't shown its trend day hand because we took out that midpoint of Asia, right? This can honestly go either way. It can go to the upside like this, or it can go to the downside like this. The market hasn't shown its hand enough for me to place this confidently and place trades around, right? So what we have to look for, and this is the part that you as the listener needs to remember, this 12 to 1600 distribution this has to be based off of, I used the midpoint of 9:30 and 10:30, right? If we can get above that between 10 and afterwards, 10 o'clock and onwards, then like if we came down, we wiped that down here, and then we stepped above that 9:30 to 10:30, and we're finding support within that range, then this will, in my mind, I won't change it on the charts, but in my mind, I will trade towards this kind of scenario. But from 9:30 to 10:30, this does play out the way it's supposed to, then this will go down like such. Does that make sense?
Yes.
To the listeners, does that make sense? Because I know you guys are fairly new to this. All right, I gotta wait on. All right. So does that make sense to the listeners? Just got home from the gym. Oh, did not? Yes. Okay. So remember, right now we have two possible scenarios, right, that are still foggy to us. Right? We know that the 9:30 to 10:30 has the highest probability of being below the 3 to 4 o'clock, right? However, there is probabilities where we can be like this, right? Where we engulf both sides of that 3 to 4 o'clock. That does have a probability. And then the other probability that is gray for today is that 12 to 1600 distribution, because, right, so what we're going to do is we're going to pay attention to two lines, the London middle and the 9:30 to 10:30 middle. Wait, yes. We're basically 309, 309, 753. Yes, future millionaire. But remember, like we're going to shift our mindsets, because when you're projecting things like this, yes, we're putting the highest probable scenario on. But remember, I always tell you guys, the farther out you do that, the more decision points get put on the charts, right? So right now, the decision point that tells us where momentum for the day is this London midline. If we step above that and find support around that, then this is all wrong, and we need to shift to these higher biases. Once 9:30 and 10:30 plays out, and as it's playing out, because I do it as it's happening, I'm always tracking that midline of the 9:30 to 10:30, and then is price staying above or below that will tell me where this 12 to 1600 distribution is going to come in at, right? Right now, this is the highest probable scenario, just like this, right? But it can shift, and these are the lines where I will make the decision. So we can even call this the New York over underline, right? And then you got the London over underline. This is the range where decisions need to be made, right? And so, like, for example, we know the more that we go up, these all have probabilities of being hit, right? And so let's say between 8 and 12, we come down, we wipe that out, and then we step up. That's telling me that the low of the day was put in. The moment we cross over that 9:30 to 10:30 midpoint, right, and we stay above it, right, in my mind, I'm thinking whatever the low is, that's the low of the day, and I need to start targeting like that, which is actually what I think is going to happen, because I've seen this play out, but I don't have probability, so that's a discretionary comment. All right. Any questions about this so far, about the whole process? Because we just ran through it. Me and Costa and a couple more people that support me, like Jerry, we've built this system where the everyday user can come in and do this, right? We're still dealing with the database, like I discussed, but for the most part, you guys have the midnight snap and you have the vet, right, that you are going to be able to use to be able to do this whole process. So right now, who is the vet available to? The vet is available to my annual and my founding members of the Captain's Times. However, I'm going to open up the opportunity. If you write me a review, whether it's these YouTube comments, my free newsletters that I give out, or the daily levels, whatever, because I got to advertise and market, and I'm not going to pay somebody to do that because I'm cheap, right? But if you do that, and you get 5 retweets on it, right, I will give it to you for a month. And every time you retweet about and you give me a honest review, good or bad, I don't really give two shits, right? I just want to get myself out there, right? I will give you access to the vet for free. It seems pretty fair.
Yeah, I think that's a good deal.
Considering I pay for all this stuff out of pocket. All right. So with that being said, any questions before I jump off?
Only from Bob, which I think I know the answer of, but I don't know if you want to answer
So
that,
if
Mickey.
you're Bob, like if you are future millionaire, I need to. So I'm sending up the coder a list on Wednesday again because I'm not going to bombard him every single day. Every time I do it once a week. And the last week I did it on Wednesday. So future millionaire, you specifically need to reach out to me and I know, send me a reminder because right now I'll write down a reminder for myself to make sure that you get put on that. Motherfucker. Let me see. I'll put a reminder that I add you to that, so you should see it this next time. What's Cherry saying?
No, I just showed him my post-it pack. Private
Nice.
joke.
Yeah. Pickle Zone is about to engage. Let's look at the Pickle Zone. Let's go to the 1 minute. Here comes the Pickle Zone. It's 6:37. All right, PT. All right, PTFX, Mr. Pickle himself, right? Let's do some live exercises right now. Right, so we can see, I'm trying to get back to, there it is. There we go. All right, so based off of the data we see, right, we see that we still have probabilities to the downside. Might not happen within the next 2 hours, but we still have probabilities to the downside, right? So if this is a proper reversal, let me turn off this. Let me turn off this. Right, if this is a proper reversal, right, and we're expecting this to reverse, right, we can see that this hour hasn't taken out previous hour highs or lows, so that market clue's not there. Currently, we're finding support around the previous hour midpoint, but it's ugly, right? And this blue box is a 5-9 box, and we rejected the midpoint to a tick right here, right? So if we're expecting a reversal, if we were to trade this, we'd be positioned in 2 micros right now, right, around this 5-9 box area or this pickle zone area. And then the next hour, which happens between 7 and 8, we'd expect us to be above this previous hour midpoint and to stay above it and define a step above and below the next hour 5-9 box to add 4 to 5 more micros for a trend up, right?
Way.
But because we are in a trend down scenario, right? We're below this previous hour midpoint, below the 5-9 box, below this previous hour midpoint, below the 5-9 box. We have to think there has to be something that tells me that has a probability that this is a reversal zone, right? Looking at here, right? We have 1400 price. Like there's, I mean, from a structural standpoint, like I'm sure the supply and demand traders will say there's something here. Liquidity traders will say there's something here, like within this structure right here. But for me, like I don't have anything here, right? That tells me that this is a reversal zone, right? So I don't know. Like I'm not gonna sit here and speculate.
Because like,
Andy,
sorry.
don't push your user. Like Andy, I've put you on the list. You will get access this next Wednesday. All the people that didn't get it this last push, every Wednesday you guys will get access. Every Wednesday I'm pushing up the new list for that week's people added, and Dakota will add you guys to it. What are you saying?
No, I was just we were just talking about clues and the current hourly box, previous hourly box. We're more than halfway through in this one. As you say, it's ugly, but potentially something being built off the 5-9 box. What this box hasn't done at this stage, and I know it's not, the hour's not over, is taken the low of the previous box yet. So we currently
Yep.
kind of like in a sort of contraction, if you want to call it that. So
like live price is telling you that it wants to slow down, but it hasn't shown its hand. It's shown its hand by saying, hey, this previous hour midpoint, we're finding rejection on. This 5-9 box, we're finding rejection off the midpoint of it. And now we have the pickle box, the 637, right? So now we can safely, if we have, like, let's say we're retracing to midnight, right, which has an 89% probability throughout the day to get a hit. It's already been retraced through, so that's been fulfilled. So now the next probability is from 8 to 12 for it to have that 65% or that 70, whatever the probability was that we came up with of getting retraced, right? So let's say we want to start our position in here, right? We can start buying a fourth of our contract size, so let's say 2 micros here, and then between 7 and 8, if we see price stay above this hour's midpoint and step above the 7 o'clock 5-9 box, you can put on 3 to 4 more, and then at 8 o'clock, if we're properly trending up, you can put on the last 2 to 3, right, to target this midnight price. Or you can just do it like Austin Clark does, where at 8 to 12, he waits for his wolf to go towards midnight price, and he targets his 25 handles. Either way can be done.
Yeah, absolutely.
But yeah, with that being said, I'm going to jump off here. All right, can you explain the 5-9 box, please? I would if I had time, but now I actually have to go sit on a margin and collateral desk, and I'm out of time because it's 6:43. But all last week, I've done videos on it. You just have to go watch those videos. What is IBLX2? Oh, okay. I don't know what that is. While he answers that, I keep getting weird.
Initial balance. Is he referring to initial balance London?
Oh, okay.
Maybe
London times 2 days ago, maybe. Let's see. Okay, so he's talking about this London balance and this London balance, which this London balance responded off of previous day's London balance midpoint, and now responding off the low of Friday's London balance. So yeah, like that absolutely is a good observation because it falls within the T+1 clearance and settlement, right? There could be broken orders that happen from this, like that were placed here, and we're resetting the underlying right here. Yes, that's a possibility, but you got to realize, like, if you're gonna go down that rabbit hole, collect data on it. That rabbit hole that I just spoke of is my actual day job. Which is not a fun job. It's kind of a shitty job. I can't wait to be over with it. All right. So that's what the highest probable trade looks like right now. Remember, before I get off, we're paying attention to two lines. This London midline, which is known as our over-under line, and then as 9:30 and 10:30 develops, that over-under line, which is going to be the midline as it develops, right? And determining where momentum shifts based off of that line will determine whether 12 to 1600 distribution will go. Will it go up or will we continue going down? And will this London or this Asia 1800 be the high of the day? All right.
Yeah.
Oh,
Brilliant.
well. Look who finally decided to wake up. Austin Clark himself. Which I believe Austin will be doing the free trade starting at 8:20 in his Discord. Check it out because that's my partner right there. That's my partner in crime. He's got the same values and characters I do, statistical based trading only, and helping veterans and the working class people, and saying fuck the wolves who keep scamming you working class individuals, right? And I've got more respect for that guy right there than anybody in the space because of his values and his character, not because of the way he trades. He trades very great. I would literally send my daughter to learn how to trade from him. Actually, she does. But I would send anybody to Austin Clark. And this, you know what? This is a sales pitch to Austin Clark because I have that much respect for him and we see so line eye to eye. So check out his free trading today at yeah, thank you, Jerry. But like check out his free trading, and when he calls you a baby because you cry about losers, just smile and know that he's correct. Don't be a baby. Don't whine
Don't
about
be a
your
baby.
losses. All right, I'm going to call it today, and that's going to be it. I'll publish a newsletter, and we'll go from there. I'll see you guys tomorrow. And
Cheers,
Andy,
guys.
I'll talk about the 5-9 box tomorrow in tomorrow's video. Okay. All right.